Welcome to the Coffee Connections video interviews. Today we are going to speak with Dan Cathcart of Cathcart Financial.
So I'm Dan Cathcart. My company is Cathcart Financial. I do financial advisory. I work a lot with business owners. It's a lot of tax planning, financial planning. Business owners have unique needs as compared to an average person in terms of what they need to get done with their finances. And I've been in business for just over 20 years now.
What compelled you to start your own business, Dan?
So my background is engineering, but I started in the financial field after leaving engineering, kind of in a roundabout way. I was a real estate investor for a few years just because I didn't know what else to do. But I met someone in the financial field and started at his company. And I was there for just about a year before I branched off and started Cathcart Financial.
1 year? You're a fast learner then?
Mm-hmm.
Wow. What types of products and services do you offer? You mentioned something about business owners have different financial needs than the average homeowner and stuff.
Yeah, so business owners, there's different sets of needs. You know, if you're doing well and you've got a lot of retained earnings, the reason business owners will have retained earnings is because of taxes. That if they leave the money in the company, it's a very low tax rate, whereas if they pull it out, they're probably going to lose half of that. So it's a lot of planning around that. How do you get money out of your company on a tax preferential or tax-free basis? And that's a large part of it. There's also, if you got a few partners or one partner, has you ever had a financial advisor review your shareholders agreement and make sure that what's written there, some parts of it make sense, and that you've backstop those risks and put in place plans should some of those clauses need to be enacted, that you've got money to fund it.
That sounded really technical to me. Can you reword it for the average viewer like me that doesn't know what you mean back-funded, and what does that mean?
So a simple example, think two business owners start a business, and it's 5 years later, things are going well, company's grown. Well, what happens if one of the partners passes away?
Right.
He's probably leaving everything to his spouse.
Right.
And the other business owner may or may not want to be in business with that partner's spouse because she might not know anything about the business.
Right.
So one thing that could be in a shareholders agreement is that, if one of us passes away, the company needs to buy back those shares so that the beneficiaries can get the money and not the shares. They get what they want and the company can continue to run. Maybe they find a new partner, whatever.
Right.
So one way to backstop that is with life insurance. Because if you don't, what happens is maybe your company's worth $5 million and you pass.
Right.
So if there's two of you, well, you need to come up with $2.5 million, right away.
Right.
To buy the shares of the other owner.
Right.
And you might not be in a position to do that. If the company's only worth $5 million, you probably don't have $2.5 million cash sitting in the bank. And
yes.
If you start liquidating the assets of the business, by the time you're done that, you might not have a business.
Right.
So making sure that you have a way of actually meeting that obligation, that can be done relatively inexpensively with life insurance.
Right.
As one example.
Do you have preferred partners for life insurance services and stuff?
So I'm a broker, so I have access to a lot of companies. I have a few companies I like more than others, but it depends on the situation and the clients as to who will be the best fit.
Right. What types of products and services do you offer?
So the actual products, life insurance, disability insurance, critical illness insurance, investments, all broad range of category of investments, all the registered plans, LIF, PRIF, LRIF, RSP, LIRA, TFSA, unregistered accounts, and then something that's less known, but on the insurance side, especially life insurance, it's the largest in Canada tax shelter that's available to Canadians, is life insurance. You can do a lot of tax planning with it. It's one way of getting a lot of money out tax-free. Right, and it's not the only piece of the Act that applies. Another big section that applies is all the rollover provisions in Section 85. So there's a lot you can do.
What is a rollover provision?
It's a way of transferring assets without paying tax. It's called a rollover.
Okay.
So one example, like outside of business or in business, but with life insurance, you're allowed to essentially cascade the money there intergenerationally. So, a grandparent could set up a policy for, their kid that transfers to the grandkid, or there's a lot of ways of moving wealth intergenerationally without having to pay tax through life insurance, because there's different sections of the Income Tax Act that apply. One that's kind of interesting is critical illness insurance for business owners. And it's interesting because it's not mentioned in the Income Tax Act. Like, it's just not anywhere in there.
Right.
But for decades, business owners have been using it to essentially, critical illness insurance is if something serious happens to you, cancer, heart attack, or stroke, life is kind of taking you down, it's good to have money to help deal with that. Right? Like, as a real world example, I had a client who got cancer. Now here in Edmonton, we're very lucky, right? The Cross Cancer Institute is here, we have good care, but it's still expensive, right? You still have to go there all the time, parking, if you're in the city, it's just parking, maybe you've got to get family to come in to help.
Yeah.
There's lots of expenses, and then the more exotic ones, like maybe you have something that they don't deal well with here, and maybe you want to go down to the States or somewhere else where they have specialists for that.
Right.
Critical illness can give you the money to do all that.
Right.
And for business owners, you can do something called split dollar or shared cost ownership on a CI policy, where the business pays for the coverage, and then the individual pays for what's called a return of premium, which just means if you stay healthy and don't make a claim, they'll give you back all the money you paid.
Wow.
And so when you do that, the individual is getting all the money the corporation paid without having to pay personal tax on it.
Wow.
So it's a way of getting some retained earnings out of the company for business owners on a tax-free basis. And it's interesting because it's not in the Income Tax Act, but it's like CRA knows about it. This has been going on for decades. It's never been challenged. There's one insurance carrier who's spent the time, the energy, and the money to get essentially a comfort letter from the CRA saying, here's what we're doing for clients. What do you think? Are you okay with that? And they actually have it in writing. Yeah, they don't see any issue with it, but CRA has yet to rule. So it's an interesting way of, using a product.
How does the company make any money off that?
So the only way they make money is you've given them the money for a determined amount of time, and they're using that, investing it to make money.
Oh, okay.
Yeah, car insurance is too transactional, right? Like, it claims all the time, people paying all the time, but you go critical illness, life, especially life insurance, there aren't claims like there are with car insurance. You can crash your car 20 times in your lifetime and make claims, but
Right.
you can only die once.
Yes.
And same with CI, so there's longer time periods where the company has capital that they can invest and make money on.
So the company can pay the premiums, and the owner of the company can cash it out anytime?
There is a time frame, typically 10, 15 years on the early, and you can push
Right.
that out.
Right.
So it's not instant, it's over time, but it allows a business owner that you probably want that coverage anyways. You want to cover off that risk,
Right.
especially for owners, key employees.
Right.
While you're doing that,
Right.
by the way, you can also do this so that you're, if you stay healthy, here's your reward. If you don't, well, you get the big payout and deal with it. But if you stay healthy, it's nice to be like, hey, here's a bonus.
Right. So if, say the person did die and that money would go to their family, are you saying that? Or would that go to pay the company bills?
So it depends the purpose of the insurance. So there's, when you look at the shareholders agreement, you're typically looking on life insurance like a buy-sell, and that's meant to pay the company to deal with the company matters, or disability, it's meant to pay the company, if one of the owners isn't coming back to work ever, let's buy out shares, maybe find some interim help, those kind of purposes. But you can also buy insurance in addition to that is meant for family, yourself. And you can do that with corporate dollars depending on your structure. That wouldn't typically be done in the operating company, it'd be done in a holding company. But there's a lot of flexibility.
Oh, well. Describe your ideal client. Like, what would they look like? Male, female, age, personality, circumstances?
So my ideal client, gender is not very important. I have everyone. But I like working with business owners, even sometimes the startup, because that's where a lot of the shareholders agreement and making sure you're funded and all that comes in. But older, more established business owners, that's when you start to get into some of the tax planning and,
Right.
different problems. You know, a successful business owner, sometimes it's not even a risk discussion. Like, they don't need life insurance because they have enough money, but they have tax issues. You know, they've got redundant capital that they don't want to give half of it to the government.
Right.
And you're solving a different set of problems there.
Right. When a new business starts up, they could hire you to help them with all of the foundational financial structures, and then as they grow, you can provide more services and invest their money. Is that correct?
Yeah, and a lot of, I have clients in all kinds of different stages and ages, and that's kind of the general progression. Like, if you're just starting out in business, it's okay, well, we're just getting started, you got to start at the beginning.
Right.
And then, of course, that changes over time.
Right. Is it easier to start, like, to do a shareholders agreement at the startup of it, or like, are they unclear as to what they're doing, so it's a little bit more difficult for you?
So in the beginning, I don't write the shareholders agreement, that would be their lawyer, but I do review it, and their accountant has a lot of say in it around share structure and things like that. And because I've done it for so long, I can add value, like look at it and ask questions, because, you know, accountants are busy, lawyers are busy, and sometimes they're using templates, and there's things outside of, you know, my scope, but they're financial. Like, maybe, you know, you got two partners and they each own the same class of shares, 50-50 in the company, and that limits their tax planning ability. It's not really something I do, but it's something I can mention and say, hey, maybe ask your accountant why it's this way and not that way, because the way it is right now, you've lost a little flexibility. Like, you each have to be paid essentially the same way. You don't have the same kind of flexibility in how you're remunerated for taxes, so that, you know, maybe you need this, but your partner might want that.
Does that mean they could get paid differently but same value? Okay.
Yeah, so if you each own, say it's Class A shares, and, you know, one owns half, the other owns a half, if you declare a dividend, it's split evenly between them. And maybe for different reasons, one of them might want to be paid salary for certain reasons, and one might want dividends for other reasons. And if you both own the same class of shares, you can't do that. Because if you declare a dividend, you're each getting the same amount.
Right. Wow. Lots of details that I don't know anything about, but thankfully I'm learning.
Yeah.
What advice would you give your younger self to save you from experiencing something needlessly in starting your business?
That's a good one. So there's lots of stuff, and some of it's just general to any business. You know, business isn't easy. Like, business owners take a lot of risk on, and like, there's things you can do in the beginning that can make your life easier. You know, if you're starting a business, either be well capitalized or get a big line of credit, because there's going to be a lot of ups and downs, and you need to be able to smooth that out. Would be a good thing, so you can ride out some of the turbulence in starting a business. Right.
So give me an example of turbulence when you first started.
So in my business, like, I don't have a salary, I don't have a paycheck. It's what I make is different every month, and it's been that way since I started. And when you start, there can be really big swings. You could make nothing and be spending a ton of money, and you got to be able to bankroll that. And some months you make good money. Conversely, you need a place to put that and you know, manage for leaner months, especially when you're starting, because you might have 2 months of nothing and then 2 months of something. You need to be able to balance that out. Right.
What does your business offer clients that differentiates you from your competitors?
So I have a very strong focus on tax planning. It's I kind of like, you know, you shouldn't pay more to the government than you absolutely have to. Right. The money is much better off in your hands, in my opinion, than the government's. So everything I do, even, you know, you look at retirement planning, it's what are we doing today and what does that mean 40 years from now, and is that what we want from a tax perspective?
So you're a forward thinker.
Yeah, it's the bigger picture, long-term thinking, right? Like, the tax planning is different than maybe what your accountant's doing, because he's looking at the year to year, maybe a year or two ahead, whereas I'm looking at, you know, if you're 30, I'm thinking 80 years, 70 years.
Yes.
Right, depending how long you live.
We know that wisdom comes with experience. What words of wisdom would you share with new entrepreneurs in your field of expertise?
So my business is very much relational, right? It's you can't run an ad campaign and sell a product. It's It's more about building relationships with people and understanding their needs. Because when I take on a client, and a lot of my clients have been with me for 20 years, and they'll probably be with me when they pass.
Yeah.
Right? It's a long-term game, so
Yeah.
you've got to invest into the relationships.
Right. How do you do that?
So in my field, like, you've got to build good relationships. There's centers of influences that you work well together. Like in my world, accountants, lawyers are kind of key people to know, because their clients are very similar. They're doing a lot of the same things at the same time, right? Even your shareholders agreement, that's done by your lawyer, but with input from your accountant. And if you have a financial advisor, it's good to have their input as well, because we all look at different things because we're experts in different areas.
Right.
My whole business has been essentially word of mouth. I don't really have any marketing per se. It's all networking, building relationships, referral. It's basically how my business is run.
Good old fashioned.
Yeah, right. It's funny, but if you meet someone who could run you an amazing advertising campaign, if 1,000 people call me in a month, I can't help that many people.
Exactly. Yeah. You'd only disappoint them, and
Yeah.
first impressions last.
Yeah.
So you want to make it a good first impression. What type of emotional support did you receive at the beginning of your entrepreneurial journey? For example, did your friends and family encourage you in your vision, or did they say that you're crazy to do this?
So friends and family weren't very much behind it. They weren't necessarily totally against it, and they weren't supportive. They were kind of in the middle, just sort of, yeah, it's interesting, maybe it'll work, maybe it won't. But once you start in business, you'll meet other business owners, and I've had people along the way who've shown me different things and supported me with, in different times. And sometimes just another person's perspective on a matter can help a lot too.
Yeah.
And their experience. So.
Exactly. What was the driving force that kept you pushing on during the tough times?
So I think if you're going to be an entrepreneur, you have to be a little bit stubborn, or a lot stubborn. I think that's probably one of the common characteristics between all entrepreneurs.
Yeah.
Because at some point, you got to pick your path and you have to stick to it. And yeah, just know that as an entrepreneur, there's always going to be some adversity, and there's going to be ups and downs, and you have to have that attitude that this is what I'm doing, this is my plan, I'm sticking to it. Because at some points, that's all you're going to have.
Any last words to the viewers?
I think for my world in finances, it's one of those things that where what you don't know can definitely hurt you. And obviously, I'm incredibly biased. I am a financial advisor, but I think everybody should have one. And I'm an independent advisor, so I don't work for a bank or something. So my clients are my business. What's best for them is best for me. So I think having an independent advisor, trusted advisor at your side to go through all this is really important. No matter what spot you are in life, that they can probably make a big impact on where you're headed.